Good morning. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Okay, here we are mid-June. Markets are still doing pretty good, so let's talk about the equity markets a little bit. Basically, the equity markets are still in a clear uptrend, but also we have a lot of geopolitical tension, and I wouldn't be surprised to see that what's going on in Iraq or Ukraine may give the market an excuse to maybe take in some profits or sell off. However, so far we don't have any sell signals, so we go with the assumption that the market's still trending up until we're shown something otherwise different. Now, the NASDAQ's acting very well. The levels I'd be looking for to see the NASDAQ can hold the 42.45 level. That should provide the first level of support. Then we go down to about 4,200 level, and if it broke through to 41.45, we may indeed be breaking down. And of course, on the upside, see if the market can take out its March high of about 43.71. On the S&P, we expect the S&P to be able to hold the 1920 level. The next level of support would be 1900 below that, and about 1889 below that. That coincide right with about the 50-day moving average. Now, one of the other things that's very positive for the market is growth stocks are back in favor. If you recall, in March, growth stocks got hit pretty hard. They sold off. The NASDAQ and Russell 2000 didn't do very well, while the S&P and the Dow continued moving forward. However, that situation has changed a lot now. And what I'm seeing is a lot of big gap ups and a lot of the growth technology or biotech stocks, and these are some of the stocks you should focus on. Now, I've talked about some of these stocks last week. Cavium, CAVM, a few weeks ago it gapped up, continued to move higher. We saw the same thing in Palo Alto Networks, that symbol is PANW, broke through a 72.50 buy point, gapped up out of a double bottom base, and continued to move higher. So that's very positive for the market. Now, last week on Friday, we saw a lot of very good gap ups that tells you that these gap ups are buyable. They haven't broken down. And we saw that in Yelp, which the news that sparked that was when Priceline was buying OpenTable. So Yelp's doing very well in a big gap up. That's some you could look into. We have Intel, big gap up that's holding its gap. Analog Devices, ADI, also did the same thing. Synaptics, symbol SYNA, and Restoration Hardware, RH. All these stocks had a huge gap up, and they haven't violated that gap. So if you're going to play these, you can chase these and use the bottom of the gap up day as your stop, or maybe add 2-3% below that. Depends on the volatility of each individual stock. So that again tells us that growth stocks are in favor. Now, another thing that we're seeing too is a lot of the former leaders are building their right side of their consolidation, or called the right side of their base. And we're seeing that happening in Biogen, BIIB, Alexion, ALXN, Jazz Pharmaceutical, JAZZ. We see that in Celgene, CELG, Actavis, ACT, Michael Kors, KORS. We're seeing this in Under Armour. And of course, Facebook's doing the same thing. And of course, Gilead, GILD, one of our favorite biotech plays, is also near a buy point. So none of these are buy recommendations. You should really consult your financial advisor if these plays are for you. But these are two lists of stocks that are shaping up. And if the market's going to move higher, you should definitely want to take a look at some of these. Now, for full disclosure, I do own some of these, or we do trade in and out of these depending on market conditions. But as always, let price and volume be your guide. That's going to guide you which way the market's going to go. End of the quarter, possibly some profit taking coming up, and also geopolitical situation may cause some market fears as well. But like I said, let's price and volume be your guide. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.